Hello traders, Gary Wagner here, just about 1:30 in Honolulu, 7:30 in New York. It is Tuesday, 11th day of August, 2020, and this is the daily report for gold and silver. Incredible price decline, a free fall in terms of pricing in both gold and silver. We will discuss the particulars in detail. We will go over our trades today. We will also talk about our targets where we think the retracement could take price points to, but first to the price board. Traders, we all knew that it was when and not if we would see both gold and silver pricing correct from this historical and monumental move to the upside, with gold actually trading to multiple new record all-time highs throughout last week and the week prior to that. Well, that ended today. We not only saw the market sell off and break through 2,000, but it went pretty deep in terms of the retracement itself. Just in a single day, we had a decline of $117.90, almost a 6% decline, with gold futures basis the December contract at $1,921.80. I have not said that number for quite some time. I'm extremely excited about the opportunities that this is going to present us in the upcoming weeks when we determine that that correction has concluded. We pulled profits last week on our gold. We pulled profits last week on our NUGT, our nugget. Today, we had stops hit in silver. We'll talk about the ETFs. We'll talk about the silver trade. We'll more importantly discuss where we believe we could see gold prices trade to, as well as silver prices trade to, and discuss our next strategy. As you can see, trading is now resumed after the break and is now opened in Australia, 1925.30. It is saying that it is down 21, but if you recall, we had marked out the last print in terms of trade at 1921.80, and that was a net decline of over $117 on the day. When we look at spot pricing, it is currently fixed at $1,915 and change. However, when we look at the activity this day, it closed down $115.90. It declined by 5.72%. Silver had the largest of all declines. It is currently printing at $25.10 on the day. In terms of the market close itself, it closed down by 15%, a total of $4.40 in terms of the net drawdown, and the fixed price was $21.86. So we can see that that is slightly higher on the day. And that was all done, traders, with nominal fractional gains in the US dollar, up just under 0.8%. But what's more important is to look at our charts and determine where we think this market could go to, because as I said in our opening letter, there is a huge opportunity that has been presented to our subscribers that took advantage of the last trade, as well as new subscribers that have come in the interim because they can get ready for the next trade. Because I absolutely believe that this is a retracement that will be followed by another leg of the market to the upside, and that will take gold pricing at least to a new all-time record high, and silver could challenge the highs of $50 plus at the same time. So let's take a look at our charts. I am so excited about the opportunity that we will once again be presented with for both those that took advantage of our last trade recommendations and those new subscribers coming in wondering when to enter the market. Well, for the new subscribers, it's going to be on our next trade. And let's start talking about that right now. We knew that at some point gold pricing would come down. And according to our technical studies currently, this particular leg of the wave, which took gold from approximately 1450 up to approximately 2090, is a third leg of a five-leg move. In other words, on an Elliott wave count, this takes us to the top of 3 on our intermediate count, and it's a 355, which means we will get some sort of a fourth wave retracement, And then, more importantly, we will get a final fifth wave, which we will be able to calculate based upon where the fourth wave goes. That being said, what we are looking at is a basic Fibonacci retracement, and we are charting the different areas we think this market could go to. Now, 1940 is the 23% retracement, and the market, according to this chart, closed above it but then opened below it. So there is absolutely some resistance, whether it is strong or mild, at this particular price point. The next price point to look for is got to be the 38% retracement, and the 38% retracement takes you roughly to 1844. Now, we are doing this on a daily chart, which is an interim term Elliott wave and retracement. And I don't think that it will go much deeper than a 50% retracement. And the reason being is when we look at this particular price point, there is so much data back here suggests support in this area that I find it highly unlikely that it would go past that price point. And then in conjunction with the 50-day moving average, which is our second question. Did today's price move and even further decline in gold sustain any technical damage when we look at our charts? No, because as you can see, this is our 50-day moving average here, our 200-day moving average here. 200-day is used for long-term moves. Interim and short-term moves, they do use a 50-day. We are definitely still far above that in terms of pricing. And if we do get a decline, I would look for the first level of potential support really to come in this area. It seems most logical that if it does break through $1,900 on a closing basis, this is the particular price point that we want to look at. Let's take a look at our silver charts. We are looking at a daily chart, September silver futures, and like gold, we saw market prices close just above the 23% retracement, and then we saw an open below that price point. But as you can see in the case of silver, it seems like it is much closer to this area that has some potential resistance. That being said, and this includes gold because I did not mention it, we talked about different levels of the market moving down to, but if we get a solid performance and recovery where pricing in gold or silver or both trades effectively above the 23% retracement, it would be an extremely shallow correction and could actually last only a few days. But the jury is still out as to whether or not we will see more downside on the market. If we do, the first price point that we want to look at is the 38% retracement. That comes in at approximately $23 per ounce. The 50% retracement, although it's not as strong in terms of physical data, that comes in at $20.76. Traders, we did take profits on our silver trade today. I've just put up on the screen where we got in, where we got out, and the profit per COMEX contract. Again, we will look at where we think the market could go on a further decline and look to see if it recovers, and if so, if we get effective closes in both gold and silver above the 23% retracement. We are looking at a daily chart of GLD, which is the Spider Gold Trust. Of course, we entered this trade on approximately the 29th of June, so we had a very favorable price. We entered the trade at about 168, 167.87 per share. As the market rose, we put our stop and moved it up to 187.51. However, if you effectively had a stop that was good till cancel, the one thing that you will notice, of course, is the fact that this market gapped from this particular price at 189 on yesterday's close and then proceeded to sell lower and really open. The fix on the open is 183.57. So you would have gotten out at 183.57 because of that gap. Remember, the definition of a stop is if it hits or breaks through that price point it then becomes a market order and is filled at best available price. Futures and stocks are the same. So effectively, we got in at 167.87, out at 183.61. I am putting up on the screen the profit per share that was achieved on this particular recommendation. Traders, the last chart we're going to look at is the Silver Trust. We were stopped out in a nice profit again today. On this particular trade, unlike the gold electronically traded funds, it did not gap on the open where our stop was. You can see there was a gap here, but we got out at roughly 23.80. That's where our stop was. We entered the trade at $18, and I'm now putting up on the screen the exact profit per share on this particular recommendation. All traders should be flat with no active trades, and we will discuss in the next couple of days when we're going to enter and what price points we are looking at. We will look at a couple of different models, but we had an excellent week last week, pulling profits on Nugget, gold, and Forex gold, and then this week getting out of our silver trade, our GDL, and our SLV. This has been Gary Wagner, wishing you as always good trading. I am pleased that I was able to deliver that to you today. Bye-bye. We'll talk to you tomorrow for the next daily update and review.